Good morning and welcome to IG's early morning call. I'm Angela Barnes. Coming up on today's programme, well, Hong Kong's Hang Seng leads losses as traders digest the latest economic data from China. Meanwhile, the Australian dollar dipped after the Reserve Bank of Australia hiked its interest rate by 25 basis points as expected, but tempered its hawkish stance. And British consumer spending grew at the slowest pace in 3 months, according to the latest UK BRC retail sales monitor data. Well, let's just start by taking a look at volatility this morning and pull up the VIX chart. And you can see volatility has fallen over the last week and looks set to continue that downward trajectory this week too, when the VIX touched a fresh 6-week low last week, reflecting that investor anxiety, but since that had eased, of course. But since yesterday, however, when we look at the chart, it has been edging up slightly again since yesterday afternoon. That lower volatility, however, has come after data showed signs of slowing US jobs growth and an uptick in unemployment, boosting hopes that the Federal Reserve is done with its interest rate hiking campaign. But as mentioned, volatility has risen slightly today, currently up 1.36%. Well, with 30 minutes to go until European markets open, this is how the pre-market is looking across Europe. Well, the FTSE 100 is set to open lower, down 0.18%. France's CAC 40 also set to open in the red, down 0.38%, and Germany's DAX also set for a lower open, down 0.24%. On Monday night, the FTSE 100 bounced back, but European stocks finished in the red following last week's rally and hopes interest rates have peaked. Europe's stock 600 also lost 0.14% after jumping more than 3% last week. Well, let's have a look at how things were looking in Asia overnight. Well, the Nikkei 225 was down 1.34%. Hong Kong's Hang Seng down 1.52%. And Australia's S&P ASX 200 also in the red, down 0.29%. Well, Australia's rate decision is in focus, and China also, as noted, released its latest trade balance for October this morning. But let's have a look at Wall Street, because Wall Street was higher on Monday after logging its best week this year, supported by optimism that the US Fed is done with raising interest rates. The US bond yields climbed, sending the US dollar higher, and also put downward pressure on commodities, including oil, which we'll look at in a little while. Apple and Nvidia led gains on Wall Street, but let's just have a look how it all closed. So the Dow Jones Industrial Average up 0.10%. The S&P 500 as well also closed higher, as well as the Dow Jones Industrial Average. Well, in early trade, let's have a look at how things are looking. The main indexes are currently pointing to a lower open. US 500 down 0.28%. The Nasdaq, otherwise known as US Tech 100 on our IG platform, also down 0.25%. And Wall Street, the Dow Jones also set for a lower open, down 0.28%. So whilst most major companies have now reported in the US, a few other big earnings are out, including Disney on Wednesday, that we're keeping crossed, and we'll update you on a couple more in a moment. But let's move on now as well, because the Reserve Bank of Australia has hiked its interest rate to a 12-year high. The cash target went up by 25 basis points to 4.35%, ending 4 months of steady policy. A move that was expected after inflation came in higher than forecast last quarter. Rates have now risen by 425 basis points since May last year. Wrapping the meeting, RBA Governor Michelle Bullock said recent data suggested there was a risk inflation would remain higher for longer. Central bank's own forecast as well for CPI had been lifted to 3.5% by the end of 2024 from 3.3%. Inflation is now expected to reach target band by the end of 2025. Well, she said Whether further tightening of monetary policy is required to ensure that inflation returns to target in a reasonable timeframe will depend upon the data and the evolving assessment of risks. Well, Bullock's statement was taken as a step back from the October decision, which stated that some further tightening may be required, leading markets to believe this might be the last hike of the cycle. And if we just head over to forex here and look at the Aussie dollar, US dollar price chart here, well, it slipped. The Australian dollar slipped as a result of this, and the pair is currently down 0.92%. It comes after the pair soared by over 3% last week, making it the best week since November 2022. Well, moving on, and China's imports unexpectedly grew in October, while exports contracted at a quicker pace than forecast, which means that trade surplus was much smaller than what analysts anticipated. Trade surplus narrowed to $56.53 billion in October from $77.7 billion in September. Expectations were for a surplus of $82 billion. Well, exports also dropped 6.4% year over year. They were expected to fall 3.3% from a 6.2% drop a year ago. Meanwhile, imports rose 3%, dashing forecasts for a 4.8% contraction, snapping 11 straight months of declines. Improvements in imports may have come from rising domestic demand. Recent economic indicators suggest that the policy support measures introduced in June to shore up economic growth are beginning to take effect, although manufacturing activity contracted again last month. Well, policymakers are contending with a domestic property crisis, high youth unemployment, depressed private sector confidence, as well as a slowdown in global growth, and of course, Sino-US tensions over trade, technology, and geopolitics, all playing into this picture. Well, let's move on now to other economic data, because we also have the BRC retail sales monitor, as noted earlier. And British consumer spending, well, it grew at the slowest pace in 3 months. Spending growth slowed to a 3-month low of 2.5% in October from 2.7% in September. Sales growth was driven by food spending, which rose 7.9% year on year in the 3 months to the end of October, while non-food spending over the same period fell by 1%. According to BRC Chief Executive Helen Dickinson, many households are delaying their Christmas spending in the hopes they can grab a bargain in the upcoming Black Friday sales. Well, a separate survey from Barclays showed that debit and credit card spending between September 24th and October the 21st rose by 2.6% year over year, the smallest annual increase since September 2022. Well, Halifax house prices, meanwhile, well, they rose more than expected in October. According to Halifax, the index rose by 1.1% from minus 0.3% in September, beating expectations of a 0.2% increase. Meanwhile, let's look at some more corporate updates, because Associated British Foods has reported a 5% increase in annual profit and a 16% increase in group revenue. Well, the group, whose shares have risen 34% so far this year, said earlier in September that profit growth in 2023-24 would be driven by a substantial improvement at its sugar business and a strong recovery in Primark's margin thanks to lower material and freight costs. Well, in its statement, ABF said that whilst the environment is still challenging for the consumer, inflationary pressures have eased and there is less volatility than there was 12 months ago. The group is well positioned as a result. Well, let's move on to Persimmon now, because it's also released an earnings update. The UK house builder said it now expects to build 9,500 homes in 2023, above its August forecast of 9,000 units. In August, the company flagged affordability concerns from higher mortgage rates, but forecast annual profit in line with its expectations. At the time, it said the group's order book, a key metric that gauges short-term sales performance, declined 30% compared to a year ago to £1.6 billion, compared with £2.2 billion in August 2022. Well, since the start of the year, the stock price for the company, just looking at the price chart quickly, well, its share price has actually fallen about 9% since the start of the year. Moving on now as well to UBS, because UBS Group has posted a $785 million third quarter loss, to be compared with the $444 million loss anticipated by analysts. Well, the Swiss bank had to book $2.1 billion in expenses tied to the takeover of Credit Suisse. Excluding takeover-related impact, UBS reported underlying profit of $844 million. Well, since the takeover last June, UBS has overseen more than $5 trillion in assets, but it is still working hard at stabilizing the new structure. Well, to prevent Credit Suisse clients from leaving, it had to offer above market rates on deposits. As well, restructuring, it noted, is also inevitable. UBS has said it would axe a number of jobs, including 3,000 in Switzerland alone. Well, we've also got earnings today from Uber reporting its Q3 results. The company is forecast to publish earnings of 7 cents per share. This would compare to an 18 cents loss in the same quarter last year. Revenue is expected at $9.54 billion. Well, if we look at the Uber price chart here, it's an all-session stock on the IG platform, currently up 0.5%. But over the past few weeks, analysts have grown increasingly bullish on the stock, some of them up in their price target to $60 or higher. Uber shares have posted their best weekly performance as well since May last week. Well, other US earnings to look out for as well this week. We've got Occidental Petroleum, eBay and Robinhood Markets as well, all releasing Q3 earnings, which we'll also be keeping across. Now, moving on as well, let's go to commodities and take a look at what oil prices are doing this morning after the release of that economic data from China as well. Well, we can see here that both, I'm on gold. I'll go to that in a moment. We've got Brent crude here, currently down 1.25%, trading around $84 a barrel. And then if we switch over to US crude, also lower this morning, down 1.26%, trading around $79 a barrel. So both lower despite oil imports showing robust growth year on year and month on month in October in China. However, China's exports still contracted at a quicker pace than expected. So we'll be keeping across those oil prices as well. And let's move on to gold and take a look at how that's performing this morning. Also lower today as investors continue to opt away from the safe haven asset, currently down 0.46%. Instead, investors tend to be turning back towards riskier assets due to improved risk sentiment. The price of the LA metal trading lower is noted currently at $19.68 per troy ounce. Moreover, the reduced demand as well for the precious metal is linked to the resurgence as well in US Treasury yields, as the 10-year US Treasury year bounced back from the 6-week low observed on Friday. Well, that's all we've got time for today on an early morning call. Thank you very much for watching. Do tune in to Beat the Street this afternoon, and I'll look ahead for more updates.